You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology, specifically with the credit union world in mind, but I think there's plenty of insights for others to pick up as well, and that is certainly the case this week. We're going to be speaking with Nick Evans, the president and CEO of the Circle Collective, talking about the launch of their second fund, the Circle Fund, a strategic investment fund to invest credit union money into fintech startups. And actually a pretty good-sized initiative. So I think there's a lot to be learned here from the standpoint of equity funds. They do make the point of the fact that they are a strategic investment fund, not a venture fund. But I mean, the basic logic in terms of some of the investment and the liquidity issues and things like that, I think are quite relevant for both. So hopefully you'll find it as educational and interesting as I did. As always, you can find out more about the Best Innovation Group at our website, big-fintech.com. Just last week, I just got back from one of our Innovation Club meetings. I've attended those, the Zoom meetings that take place on a monthly basis before, but I'd never actually managed to attend one in person. This one took place in Tampa, Florida, and I was really impressed by the level of conversation, interaction, and brainstorming that took place. I'm looking forward to seeing exactly how that gets followed up on in terms of taking some of these ideas into production in the various credit unions that participate. If you're interested in such things, please do check it out at the Best Innovation Group website. Again, big-fintech.com. There is a drop-down tab for the Innovation Club. You can read about it there or leave your name, and somebody will be back in touch. They would love to tell you more about it. For now, let's jump into this conversation, kind of pushing back on a narrative that's been out there for several months, if not years now, going back into 2022, that fintech funding and startup funding in general is drying up. Certainly true that valuations are down, and certainly true that investment levels are down from the prior year. You know, the question is always what comparison point you're using. Fintech funding got insanely overheated, I think, not to the point of maybe cryptocurrency, but there was a pretty big spike in investment in the 2020, 2021 timeframe. It has certainly slowed down a lot. If you look at the longer term trend, it's pretty much gone back to where it was pre-COVID. Maybe a little lower, but cycles take place. As we know, in the current higher interest rate environment, it can be a little bit trickier. You know, the free money aspect of investing and making risky investments a little bit easier becomes a challenge. Having said that, we've got a couple of data points that we're going to talk about that really indicate the opposite, that the interest in fintech investment is alive and well. The Circle Fund being Exhibit A. Round 2 is looking to be bigger than round 1, as you'll be hearing about, and even round 1 itself exceeded expectations in the first place. Another one that I'll point to is from my hometown here in Atlanta, Georgia, TTV Capital, which focuses entirely on fintech. They are more traditionally defined, they define themselves as a venture fund, as opposed to Circle, which is a strategic investment fund. TTV Capital just closed their 6th fund of fintech investment at $250 million. That was their largest fund they've done to date, and it was $100 million over what they initially set out to raise. So there is interest out there. There is no question in my mind that this is still happening, and you're going to hear about Circle going after $300 million, kind of on the low end, which again will be higher than their first fund. So Nick's going to tell us about that. I can't remember if I've mentioned this before, but I teach a college course occasionally. I've done this now all the way through a full semester once, and I've done guest lectures several times on the fintech space. And this conversation with Nick wound up going into more depth than I expected about some of the details of how the mechanics of investment and capital raises and liquidity issues that certainly come into play when someone decides to make a multi-million-dollar investment into a fund, how they play out. I think this conversation is a great education, and I'm thinking that I may actually assign it to my next batch of students just so they can get a sense for the space. So anyway, with no further ado, my conversation with Nick Evans of the Circle Collective. I'm here with Nick Evans, the president and CEO of the Circle Collective. Nick, you and I just saw each other recently at Finovate with the fire hose effect of all the demos of fintech companies. I'm sure that's part of your everyday existence, looking for the latest and greatest in the companies that could move the meter on that. Thanks for taking some time to talk about what's going on at Circle.
Yeah, Glenn, great to talk to you again. And yes, Finovate is definitely action-packed with, I think we saw 70, didn't we? 70 fintechs presenting.
I counted 66, but yeah, pretty darn close. Yep.
Yeah, and then everything that goes with the networking hall that they have when talking to people. And so not only do you see a lot of fintechs, you see a lot of other people, right?
Exactly. That's always one of my go-tos for the year. But right now, I think what we wanted to talk about, you've got the second, was it just formerly known as Circle 2? Your second fund is now officially opened?
Yes, Circle Fund 2 is officially open. And so we are in the middle of fundraising for what's next. So we made no bones about it when we started talking about Circle and when we created Circle 3 years ago, that we would have a family of funds. It wasn't going to be just a one-trick pony kind of company. And so this is just the next iteration, Glenn, and we're very excited, and we think that there will be a lot of interest, even with the headwinds that exist in the market.
Well, let's talk about a couple of those things. First off, in the first fund, 20 portfolio companies, I believe. I think one of them's already exited, so there's probably 19 active. But that fund, that is the number, right? You're not adding any more, correct?
Actually, no, we're continuing to add. So to give you an example, Glenn, so we've invested about $118 million right now in 22 fintechs. In fact, the 22nd fintech closed last week.
Oh, wow.
Last Friday, as a matter of fact. And you're right, we've had one exit. Payrailz was sold to Jack Henry last September. And so there's 21 active, but we anticipate Circle Fund 1 will end up being about 30 portfolio companies, Glenn, when all is said and done. So we've invested about 118, and we're going to invest 180 million of our $252 million of commitments in Circle Fund 1, and we're going to hold the other 70 to 72 million back in reserve for those portfolio companies that need additional investment in years 5, 6, 7, 8 as we get to the 10-year life of the fund.
I knew you definitely held some back for that additional investment for the ones that really needed that extra push. I didn't realize that you were still actually bringing in new ones as well, which actually gets back to I think another interesting question. So the first fund, as I recall, I believe you told me 252 million was the total amount you raised. And that was well above your original expectations and intent, right? You raised that upper end a couple times.
Yeah, we did, Glenn. So we weren't sure what to expect, and it took us a while to get to 50 million. And it's the credit union industry, so we have a lot of people that kind of sit back and wait and see what's going to happen. And we had some nice credit unions that led the way, and we got to 50, and then all of a sudden the momentum started to build. The old snowball rolling downhill. Is the analogy I use. And once we got to 50, the momentum carried us to 100 million pretty quickly. And we had 150 million on the documents originally as the top end, and we blew right through that. And there were still a lot of credit unions coming in the door. And so then we raised it again. And then finally we got to 250 million, and the board said, that's probably good. And what happened was there were still one or two credit unions that were trying to get through their board process, and at the end, we changed the upper end to 252 million, and that's right where we ended. So we do think the second fund is going to be bigger, but at the same time, you and I talked about this last week, and again here this morning, is that with the issues with liquidity are playing a role in some of the conversations we're having, but at the same time, we're doing a couple things to make adjustments around the liquidity issue, and so our cash calls. We're saying our cash calls are going to be smaller, more frequent, but smaller, so a credit union can plan accordingly. And we're also leaving this fund open until next August of 24. And so there's almost a full year here for a credit union to kind of project, plan, kind of set aside dollars that they think they want to commit to Circle Fund 2. So we have the luxury of still investing out of Circle Fund 1 while we're raising money for Circle Fund 2, and allowing that conversation around the crystal ball, looking out into the crystal ball a little further, and seeing if we can overcome some of these liquidity issues.
A couple things I find really interesting about that. First off, I think clearly you've set yourself a higher upper limit. I believe your documents actually provide a max this time of 500 million. I don't know if that's technically that you expect to make it that far, but given the marketplace that we're in right now, very different fundraising environment from the first time you went out there. The idea that you can even get the 250 again would be pretty darn impressive. So that's quite a testament right there. But it sounds
thank you. Yeah, we're actually estimating this fund. We're estimating and hoping this fund will be between 300 and 500. But we did put a $500 million cap on the legal documents. We just don't want to have to move that upper cap.
Yeah.
And at the same time, Glenn, it's no secret, deploying that much money, will be watched closely by our investors. And so how we deploy that and the conversations we have around when we're raising money, how it will be deployed is a common question. And so we have the answers for that when people are talking to us. But again, we make no bones about it. We know what we're up against. We do believe it'll be bigger than Circle Fund 1. We just don't know where we'll end up. And so what we're saying right now to potential investors is that this fund will close August 31st of 24 or at 500 million, whichever comes first. So if in May we have $500 million in commitments, the fund will close. And the board has been adamant. We are not adjusting the upper limit and we're not extending the dates. And so we have a pretty defined window, for lack of a better term, on what we're going to do here.
That makes sense. And the other thing you mentioned, and I'm not 100% clear on how all this works, but when a credit union makes a commitment to invest, it sounds like it's not a matter of, hey, write the check on the closing date for the entire amount. It sounds like it's more of an installment type situation because you're not deploying all the funds immediately as well, but it's a commitment over time to provide that.
Correct. Our cash is called as needed, Glenn. In other words, we make an initial cash call and we're saying that's going to be probably 5% of your commitment. And so if you can do the math, but if you commit $5 million to Circle Fund 2, the first cash call is going to be 5% of that. And then there'll be probably 5% cash calls throughout. But we always say that you can always count on 80% of the commitment being called in the first 5 years. And that last 20% will be called in the second 5 years. So it's a 10-year life fund. Majority of the activity is in year 1 through 5. And then after that, it's basically sustaining the companies we've invested in and looking for exits on those companies. And so, it's a long-term play here. This is a 10-year life fund. And so you have to look at it that way. You can't invest with the thought process, well, we'll throw some money at it and hopefully we'll be cashed out in 2 years. It doesn't work like that. So to answer your question, yes, it's a commitment of a certain amount of dollars, but it's called over time. 80% of the money is likely going to be called over the first 5 years. Now in Circle Fund 1, we're way ahead of pace. That's why we're kind of surprising people in the market. They're saying, oh gosh, already you told us 5 years. Well, yes, but at the same time, we're strategic investors. There's a lot of activity around what we're doing at Circle. We've established a very well-known and recognizable brand. And when we say, hey, we have 68 credit unions we can bring to the table, people like that. We're not a VC, Glenn. And so, a lot of VCs are standing on the sidelines right now. And what's appealing to the fintechs with us is that, hey, we also bring potential customers to the table when you take an investment from Circle. So those are the kind of things that we built into this, and it seems to be working. So it's resonating in the marketplace.
So what I'm hearing is there's not a set schedule. It's not like you are going to provide this amount of funding on X date. It's kind of, for lack of a better word, opportunistic. It's when the investments present themselves and when you need to actually put the funding out there, you say, hey, okay, you got 30 days. This is the next installment is required.
Yeah, perfect. Perfect example is that we'll probably make our first cash call. We can't make our first cash call until we have $100 million raised or committed. And we anticipate that'll be sometime in Q1. Well, that could be January 2nd. It could be March 30th. We don't know. Yeah. The second thing is a perfect example is what we saw in Circle Fund 1, in that we called cash initially And then we, had funds to get through our first 3 or 4 investments. And then we called cash again. But we also went a 6-month period, Glenn, when we made no investments, 6 months. And that's when the market slowed down. That's when when CEOs and entrepreneurs of fintechs realized valuations changed drastically after 2021. And really, everyone was kind of sitting on their hands, not knowing what to do. And so, and during those 6 months, we didn't do any cash calls. So it's kind of driven by the market and what's going on, and cyclical is about the best way to put it.
Yeah, makes sense. How do you go about finding, I guess, you've got 22 companies, I believe you said, in Fund One. Where do you find, with $300 million, let's just say, that's a lot of investments to make. Do you expect that you've seen a lot of these companies that you'll be investing in already in Fund Two, or do you think some of these aren't known to you, may not even exist yet today?
Yes and no. So you're right. Your latter statement is correct. Some of these companies that we're going to invest in Circle Fund 2 don't exist today. We have a whole track of generative AI coming at us, right, Glenn? Who knows how that's going to shake out?
We saw plenty of that last week at
We did.
That's
And most companies today have AI built into them somehow. There's an AI component in almost every fintech that we saw last week at Finovate, and what you saw at Fintech South, and so you get the idea. And so, so some of those companies are going to have, basic pivots. There's going to be pivots with companies that we know but aren't invested in today, where the pivot really appeals to us. There's also companies that don't exist today that are going to exist in 2 or 3 years that are going to be really appealing with whatever kind of technology they bring to the market. So we're standing by the fact that we're going to invest in transformative companies that can transform operations of a credit union or can transform a member's lives. And so we stand by that. And we believe we'll have 30 companies in Circle Fund 1. We believe we'll probably have 40 companies in Circle Fund 2. And we do believe that they're out there, or they will be out there. And so we're going to stick to our philosophical guidelines that we've developed in the first 3 years of Circle Fund 1 and go from there. We are going to deploy cash a little differently, Glenn. Right now in Circle Fund 1, we say we're series agnostic. So we've done everything from a convertible note to Series F round, and everything in between. We've analyzed that. And originally, when we developed Circle Fund 1, we thought we'd be Series A. Well, if we were just a Series A investor, Glenn, we would only have 7 companies today. And so when I say we're stage agnostic, we're willing to look at a company and the technology, regardless of what stage they're raising money in. And so, for instance, if we wouldn't have invested in a stage F, we wouldn't be in Zest today, one of the most popular fintechs in the credit union space. If we wouldn't have done a convertible note, or wouldn't have been open to doing a convertible note, we wouldn't be invested in a really cool fintech on the early side of the spectrum. And so there are 2 things we're going to do different in Circle Fund 2 to deploy cash. And I talked about this a little earlier. First of all, we're going to start an accelerator. We're going to partner with an accelerator company called Generator, based in Milwaukee. They have accelerators across the United States, and we're going to seed really, really early fintechs. So what we've seen, Glenn, is there are some really great technology out there. There's some really, really sharp entrepreneurs out there that have great ideas. They might be on their 2nd or their 3rd or their 4th company, but they don't have any customers yet, or they don't even have a pilot. And so we're going to start an accelerator, and we're going to basically accelerate 10 fintechs a year for 3 years. That's 30 total. And we're going to help them get started. And we're going to carve out a little bit of Circle Fund 2, not much, just a little bit, because the risk in this kind of a scenario is a lot different. And so we're going to carve out a little bit of money, and we're going to do the accelerator. So that's on the early end.
So that's where you talk about like the convertible notes. I mean, like you say, it's a very small amount on a relative basis compared to the other investments, but it kind of answers the other half of my question: is where do you find all these companies? That's where new ones come from.
Like I said, they're just now cropping up, for lack of a better term. They're just now starting. Like I said, somebody might have sold their fintech, but they have their next great idea and they're just trying to get it off the ground. We're going to find those. We're going to know them. We're going to see them through venture tech and things like that. Even during venture tech selection, we probably saw 20 companies like that, Glenn, and we could start having additional conversations with them and say, hey, how would you like to be in our accelerator? On the other end of this,
maybe not ready for prime time to be on the stage yet, but that's an idea that's worth maybe germinating for the following year's venture tech.
Right. So when we carve out these, when we carve out this little chunk of money out of Circle Fund 2, and we get this accelerator going, the goal is to help them get their first, second, third, fifth customer, and then basically watch them grow, help them grow in the space, and then eventually be able to hand them off to Circle Fund 2 for that Series A round. Circle Fund 2's average check will be $5 million and above. Well, a startup with no customers isn't ready for a $5 million check. And so we're going to carve out a little bit of money for the accelerator. And then on the other end of the spectrum, like I said, in Circle Fund 1, we've always said that our average check size is around 5 million. Well, we're going to be able to write bigger checks in Circle Fund 2, that $10 million check, that occasional $15 million check for those companies that come to us and say, hey, I have a company here, it's going well, it's one product. I want to become a platform company. So I want to go buy XYZ. And I want to become a bigger company with more products. It'll benefit our credit unions because they can shop in one place rather than multiple places for a few different products. And we're going to help those companies become platform companies. Perfect example is Eltropy. Eltropy was our first investment in April of 21, and we've invested in Eltropy twice. But the second time they came to us and they said, we want to go buy Pop.io. We want to go buy MarsView. Can you help us? And the answer was yes. Now, we didn't have to write a very big check to do that because there were other venture capital firms in the deal. But going forward in Circle Fund 2, we're going to be able to help companies like an Eltropy who come to us and say, hey, I have my next acquisition on the drawing board here. Can you help me with a bigger check to go help acquire a company? And the answer is going to be yes. So we're going to deploy money about the same way for the bulk of it in Circle Fund 2, but we got the accelerator on one end and we've got the bigger check sizes on the other end, Glenn, to kind of round out our total offering, our total abilities.
That's a really good perspective. Thank you. We haven't mentioned this yet, but I'm assuming it's still the case. Circle Fund 1, all your investments had to be into QSOs. I assume that's still the case in Circle Fund 2? These are all QSOs?
Absolutely still the case. It's a conversation that we have early on with every company, even these companies that are going to be in our accelerator. They're going to have to be QSOs.
Oh, really?
You take
That's interesting.
Oh, yes. You take one dime, one penny from a credit union or another QSO, which we're a QSO, you have to be a QSO.
So this isn't just a matter of policy. This is a matter of law. This
is a regulatory requirement, and we continue to maintain that we're going to continue to do it correctly in the eyes of the NCUA. And so we are going to continue down that path that, yes, they have to be QSOs.
Another curiosity, when you mentioned that there are, you're anticipating probably 30 companies eventually in Circle Fund 1, we're coming up, I think you said that you're actually prepared to start making investments in Circle Fund 2 as early as the start of 2024. Will you be recruiting for both of them at the same time? Or how do you decide which fund it goes into?
No, good question. No, we'll be done in Circle Fund 1. We can't start investing out of Circle Fund 2 until we're done in Circle Fund 1. We have a bunch of investments coming out the bottom of the funnel in Circle Fund 1. So like I said, we've done 118 million of investment in Circle Fund 1. The board says we're done when we invest 180. And we have probably 25 million still coming out the bottom in the next month, where we'll do some additional closes, and we're not hurrying. Some of these companies have been in the funnel for over a year, and they're just finally coming to fruition. So we've tried to really look in our crystal ball and try to anticipate what's happening here. And again, there's no shortage of deals out there for an investor like Circle because of what we bring to the table strategically. And so that's been fun to watch as well, where a lot of VCs are sitting on the sideline. We're not a VC. We are a strategic investor. And so there's a lot of people still, our cell phones are ringing every day, Glenn.
Sounds like you got a busy Q4 coming up.
Yeah. Well,
In a
there's
good
going to
way.
be a lot of travel. I'm sure our paths will cross.
One last question. The fund two, do you expect, we talked about the supply of companies. What about the investors? Do you expect that it's going to be some of the same folks who are invested in fund one in addition to others? Like you said, you couldn't accommodate all the demand the first time around. What's the composition of the investor base looking like?
Yeah, great question. So unfortunately, we left a lot of people standing on the doorstep when we closed Circle Fund One, and we were just exhausted. We had fundraised for a year. We were really tired. The board had raised the upper limit of the fund, 2 or 3 times, and so we just said enough's enough. We have to close. I had people calling even that last week in October, saying, "I think we can do it. I think we can do it." And I said, "Nope, you can't get her done. I'm sorry.
Yeah.
We've seen it over and over. You can't get this closed in a week." So we left a lot of people standing at the door. What we did though, Glenn, is we opened up a subscription model.
I remember.
And so credit unions could subscribe and still will be able to subscribe into our ecosystem. But we have 26 credit union subscribers in Circle right now. And what that means is they get all the benefits of being in our ecosystem, except they're not owners of any of the fintechs.
So by definition, those 26 are not yet investors, but they're probably first at the table. Most likely they've expressed the interest.
Yes, best way to put it. We made no bones about it. The subscribers in Circle are waiting for Circle Fund 2. And so most of our conversations early on, as we unveiled Circle Fund 2, have been with subscribers because they didn't have those conversations the first time around. And so now they're getting the full Monty, so to speak, on what it means to be an investor and how you invest and things like that. So yes, those 26 subscriber credit unions we anticipate will mostly all be investors, and we have 68 investors in Circle Fund 1. We anticipate 85% of those will repeat. And so, and we have a few that have said, they aren't going to, or they're going to wait for their liquidity picture to clear up. And so they might be late in, next summer. We'll see. But we anticipate a lot of the same investors, plus these subscribers, plus many, many more. We'll see. And so we're also looking for ways to, our minimum commitment is $2 million. Well, that's a big number for smaller credit unions. But we're also looking at how we can be as inclusive as possible with every credit union across the United States and how that might look. So we're looking for some different ideas there, Glenn. And
some of the investors are not just directly from credit unions, but from the state leagues and whatnot too, correct?
Correct. So right now we have 3 leagues that are investors. We have NCB is an investor, Co-op and MDC are the 2 multi-owned QSO investors. So, those opportunities are still out there as well. Yep. So the big thing that's happening, Glenn, that's really surprising is there's a lot of movement in the C-suites across the country. And I'm sure you're reading about this too. And so a lot of our current investors, are looking for CEOs right now. So how does that play out over the next few months? And will the new CEO be able to have these conversations in the boardroom and things like that? So those are some of the headwinds that I talked about earlier, liquidity being the first and foremost. But again, we think that can be overcome with some sound balance sheet management practices inside of credit unions. But a lot of movement in the C-suites too, which will impact some of these conversations.
Interesting point. Yeah, I hadn't really thought about that angle, which works in both directions. Bringing
yes, it does.
Well, they may be interested, and then others that might not feel that it's the right time for them to be kind of making this play. And I know I spoke to your colleague Jim Ryan about the subscription model recently too, so we'll post a link to that conversation if people want to understand more. But with that in mind, I mean, what's the best way, both whether looking for subscription or for investment, if people want to find out more about what you got going on now, as well as what Fund 2 has in store?
We have a landing page on our website, circle.com, that people can go to and basically just indicate that they're interested and ready for a conversation. And those conversations look a lot of different ways. They could be with the CEO first and the board second, or with the C-suite first and then the boards. But we're willing to offer any kind of help we can around these conversations inside your credit union. And so, our landing page, there's just a real short, yes, I'm interested, give me a call kind of thing. And we'll go from there. So that's the easiest way to do it. Or just reach out to Jim at circle.com or Nick at circle.com and just say, hey, I'm interested, and give me a call and we'll set something up. So again, we're having as many conversations as humanly possible. The only thing the board has asked me not to do, Glenn, is to travel to every single credit union to make presentations. And the key here is we proved it could be done. With COVID, we never traveled once. Like our fund manager says, he never had to buy one cup of coffee when we were raising money for Circle Fund One. So,
on the other hand, on a wholesale basis, I got a strong suspicion we're going to be running into each other. I can think of at least two places sometime over the course of the next couple months where, the gathering places for credit unions, financial services more broadly, where you can have several cups of coffee over the course of just a couple of days.
Well, yeah, and I'll just say it out loud. Venture tech will be probably the biggest opportunity for credit unions to see innovative fintechs. We're highlighting 26 fintechs again this year, and the industry. That event is for credit unions, for the entire industry. It's for credit unions. It's for QSOs. It's for investors. It's for leagues. It's for everybody. And so I know, Glenn, you'll be there in the front row, and we always appreciate seeing you there. And we'll make sure that you have a lot of questions preloaded so that you can be our question guy.
I always do.
You are great at that.
And that was one of those events that I was mentioning too. I wouldn't miss it. That's definitely hit the high end of my list of the absolute must attends. Nick Evans, the president and CEO of Circle Collective. As I say, I'm sure I'll be seeing you, but this has been a great conversation. I've learned a lot of new stuff and fascinating stuff you got going on. Thanks so much. I always love these kind of conversations that go off in somewhat different directions than I expected. I learned something new and unexpected, as I said. I was not aware of some of the way that the cash is both flows in and out of these investment funds. Hope you picked up something along those lines as well. I also did not know that Circle was going to be starting up an accelerator. So 30 companies over the course of 3 years, 10 per year, that they're going to help get off the ground from a much earlier startup stage, or much earlier than they would normally have been investment ready from a Circle's investment criteria standpoint. So I love that. On the topic of kind of finding these companies, obviously an investment fund is only as good as the companies they can find to invest in. I thought I'd mention that the Finovate videos, the demos, the 7-minute demos from the September 11th through 13th event out in New York City are now posted on the website. So we'll add a link to that so you can check out all the companies, I think all 66 of them, as we said, that presented at Finovate, including the ones that we spoke to over the course of the last couple of weeks. And on that front, mention a little bit more about venture tech as well, which I am very excited about. November 6th through 8th in suburban Dallas, Frisco, Texas to be precise. Starts up on a Monday afternoon around lunchtime on the 6th and wraps up around lunchtime on Wednesday the 8th. As Nick mentioned, 26 fintech demos across those 3 days. When I looked at the list, over half of them are new, companies that I have not ever seen present before. So I'm extra excited about that. I always enjoy seeing how these companies are progressing, but it's really cool to see the new blood as well. This is also going to be a chance to see them presenting very specifically to a credit union audience. Many of these companies, especially at Finovate, have been making it a little bit clearer that they're open to credit union conversations, but they're still, kind of broadcasting their message to a wider audience. So it'll be interesting to see how they actually tailor that message specifically to credit unions, and plenty of chances to interact there as well. I'll mention that a couple of the companies that won Best of Show, a couple of those startups from Finovate are going to be on the stage at at Venture Tech. Chimney, who we spoke to last week on the podcast, and also Debbie, a company that we spoke to the year before, their founder Rachel Lauren, when they also won a Best of Show at their coming out party back in September of 2022. And then it's Chase Nankin is the co-founder of Chimney that we spoke to. A couple other companies I'm looking forward to seeing, our old friends CryptoFi, who have been on the podcast before, and Virtus AI. Again, I'm very interested. A credit union-centric company who just won. Mitch Rutledge was on stage and won the Innovation Challenge at FinTech South recently. Again, for a broad audience, their first customers in production are all credit unions. I forget if they have 4 or 5 in market right now, and they're very clear that that is the market that they are pursuing. So I'm very interested in seeing how that plays out. So a lot of great stuff going on. I will be there, as I said, and 26 companies, a variety of different stages of life, some of them already in the Circle portfolio, some not. I'll always be interested in finding out more. As always, you can find out more about us. You can find me on X at 154 Advisors. That is my firm, 154 Advisors. My name is Glenn Sarvati. You can find the Best Innovation Group on X at Big Fintech, or our Grand Poobah John Best at JB Fintech. They also have a website page, or a page rather, on LinkedIn. And again, as I said before, the website big-fintech.com. You can always find out more about the Bigcast at that website under the Media tab, where you will find lots of past episodes, including interviews with the companies that I just mentioned, if you'd like to go back into the archives. You can also find out a bit more about that by just looking at our show notes, which are posted there, or they should be visible wherever you find your podcast. And if you don't already, I'd appreciate if you would have give us a like, a follow, whatever they do at the platform of your choice, Apple Music, Spotify, etc. We typically put out new content here on the Bigcast every Tuesday, and next week will be no exception. Hope to hear and see you again next week. And until then, thanks as always for listening.
Check back each week for the latest from the Bigcast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech. Email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.